Get your free copy of the complete tutorial at www.teachucomp.com/free.
Equity can be a complicated subject, especially for new business owners, and a full discussion of the subject isn't a focus of this lesson. This lesson does introduce the concept of equity and helps you understand why Sage 50 creates some default equity accounts. Equity is basically the difference between what you have, your total assets, and what you owe, your total liabilities. If you sold all your assets today and paid off all your liabilities using the money received from the sale of the assets, the money left over would be your equity. A balance sheet shows the company's assets, liabilities, and equity as of a particular date. Because equity is the difference between the total assets and the total liabilities, it's also true that the total assets equal the sum of the total liabilities and equity. Sage 50 creates different equity accounts based on your response during the company file setup as to what type of legal structure your company has. As you enter the opening balances of your assets and liabilities, Sage 50 calculates the amount of equity and records it in an equity account. Sage 50 also creates the other equity accounts needed by your business. If your company is a sole proprietorship, all the equity belongs to the company's sole owner. However, you can get as involved in tracking your equity as you like. Some people like to track owners' investments, owners' draws, and retained earnings prior to their Sage 50 start date by putting them in separate equity accounts. If your business is a partnership, you'll probably want to set up separate equity accounts for each partner. To learn more about equity and to learn how to set up equity accounts in more detail, open the Sage 50 Help window by selecting Help, Help from the menu bar. On the Search tab, type the word Equity and then click the List Topics button to find informative results for it.
Like what you see? Pick up your free copy of the complete tutorial at www.teachucomp.com/free.